Yes, folks, gold will crash to $1,000 an ounce. That is roughly a 50% crash from here. We need to talk about what is a criticized loan and why that is something we should be looking for inside bank earnings statements. We'll talk about something I did in my portfolio, and I have some numbers, finally, about socialism in the housing market. Let's get into it, folks. Let's first talk with the yellow metal. There is a YouTube channel out there that I watch occasionally. It was actually referenced by Robert Kiyosaki in a tweet this weekend. Stephen Van Meter, hopefully I pronounced that correctly, Stephen Van Meter. He actually had an interesting call that gold will be dropping to $1,000 an ounce, to which Robert Kiyosaki said, if it does, back up the truck. He plans to be a large buyer of that. Interesting to hear about gold potentially crashing. That's an interesting call. I certainly did not have that on my bingo card with all the things going on in the world today. But again, shout out Stephen Van Meter. The last name is M-E-T-R-E. I'm not sure if it's Meter or Meter, but there you go. If you can find him, one of his latest videos is a call that gold will fall to $1,000 an ounce. Next, let's talk about what is a criticized loan. If you've been on the channel for a while, you know we're talking about commercial real estate a bunch. There is a lot of pain coming in that market. Where it starts often at a bank's balance sheet is something called a criticized loan. What is a criticized loan? A criticized loan is technically, well actually it's not technically, it is likely not missed a payment. So it is quote unquote current. It is meeting its payment obligations. However, the bank, as they review their portfolio yearly, and in today's environment, probably every quarter, they are now realizing that the asset, probably the office building, for example, is not worth what it was at the time of underwriting. They could have significant vacancies. They could have a tenant not releasing. They could have lots of different things. So we should start to see banks talk and report about their criticized loan portfolio. It's basically future pain that they need to get ahead of. Could they extend and pretend? Absolutely. Could they do a capital call? Absolutely. Could they sell the loan for a discount? Absolutely. So a lot of pain coming in this market going forward. Criticized loan may be something you haven't heard about before, but I think it will be something that is referenced in the commercial landscape a lot more. It is interesting to note that residential loans do not have the same category. Because again, in a residential 30-year purchase, you don't have the ability to call the loan based on home value. You do, and lots of other calls in commercial loans. So you don't see the same behavior in single families. So something I've been very honest and upfront about this account is I was buying some stocks for the first time in 20 years. My good friend Dan Bird and Taylor from Life Goal Investments have been trying to help me be better. Well, I sold stocks. I sold everything I had last Thursday afternoon. I consider it, frankly, a fail. Why do I consider that a fail? Well, again, I got emotional, right? I spend several hours a day reading about the economy as what is going on. That influences my decisions. And I came in Thursday after Blackstone's earnings and said, I'm out. I'm going flat, as they say. I don't consider it a win, right? I'm trying to get better. I'm trying to get non-emotional. Completely failed. I will say I bought better. Something that I did when we purchased, or when I purchased all of these, is I bought in tranches. So I got into the stocks better than I used to, but I exited on feelings, which is probably not what you want to do as a stock market investor. It is why I am admittedly a horrible stock market investor. I should just stick to real estate. It is slower moving. It is what I like to do. I did make money on all three trades, but that is irrelevant. I was trying to learn this. I was trying to move my stops up, do all of that. Fail, 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 fail. But I thought I would share with that. So sold Meta, sold Blackstone, and sold JP Morgan. Socialism in housing. Yes, folks, this President Biden May 1st is punishing the folks with good credit, rewarding the folks with bad credit. I actually have some numbers. These numbers come from USA Today. I read this in a USA Today article. Here is example number one. Example number one. You have a credit score of 659, 659. You are putting 25% down. Before May 1st, you would have a loan level price adjustment of 2.75%. So what does that mean? Your fee for that loan would be 2.75% times the total volume of the loan. So if it's a $200K loan, it would be, what would that be? 2.7, let's say a $100K loan. If it's a $100,000 loan, your fee would be $2,750. If it was a $200K loan, it would be $5,500, just to give you both sides. So what happens after May 1st? After May 1st, same loan, 659 credit score, 25% down. Their loan level price adjustment falls from 2.75 to 1.5. So instead of $2,750 on a $100K loan, it is now $1,500 or a savings of $1,250. Now let's go to the other side. Somebody with good credit or better credit. Now, example number two, you have a 740 credit score and you are putting 25% down. Before May 1st, your loan level price adjustment would be 0.25%. So on a 100K loan, your loan level price adjustment would be $250. Got me? After May 1st, your loan level price adjustment would be 3/8 or 0.375. So your loan level price adjustment goes from $250 to $375. Those are some examples. I'm sure there are plenty more flying around. But again, this is, as I shared yesterday, not a policy that I'm a fan of. It kind of rewards or sends the wrong message. It sends the wrong. How many people today are thinking about, I'm going to go get worse credit so I get a discount? Folks, it doesn't work that way. That's a bad idea. Again, I tell you, your loan level goes from 2.75 to 1.5. If you have good credit, it goes from 0.25 to 0.375. Yes, it goes up. Yes, I hate it. Yes, it's a bad idea. But the person with worse credit is still paying more. Don't let these people get you all twisted in knots and do stupid things. Bad credit still pays more. It just pays less more. And again, just so we're completely clear, I hate this program. I hate it. I hate it. It's not what you game for. You want to reward financial stability, but this is not raising the price of a loan for a good credit above that someone of bad credit. And I've seen lots of videos on that. That's not what's happening. Again, bad credit from 2.75 to 1.5. Better, not great. Great credit from 0.25 to 0.37. Higher, but still low. Hopefully that makes sense. Socialism and housing. Bank rate. There's an article that Bankrate put out talking about the 9 things. Yes, folks, the 9 things you should do to get ready for a recession. I will go through them quickly. Number 1, take a detailed edit or a detailed analysis of your current finances. I call this auditing your expenses, needs versus wants, all of those things. 2, make building an emergency fund priority number 1. Folks, Let's get to at least 3 months, and if you're there, push yourself to 6. Create a budget. Man, how many people don't have a budget? Olivia and I's finances, our real estate portfolio did not take serious growth until we audit our expenses, our needs versus wants, all of those things. Create a budget. And I say, go through your expenses, needs versus want. All of this is in the Get Your Money Right course for $99. There's probably a link below. Number 4, keep your emergency fund liquid, but earning a decent interest rate. For the last couple of years, you really couldn't earn a great rate, but you can today. You can easily get 4, and some of you are getting 5%. But please keep the emergency fund liquid. If you need it, you need it. Number 5, pay down higher interest rate. If you have credit card debt at 20%, let's get that down. Number 6, if you are on variable rate debt, which hopefully if you're on this channel, you are not, let's get that put into fixed rate debt if it is still feasible. Number 7, don't make any knee-jerk reactions with investing. This is something I am personally bad at. I just told you a minute ago, I had a feeling and I sold out of my stocks. Probably not a great idea. I am not someone to follow for stock market advice. Not my thing, not my thing, not my thing. But again, sort of don't do as I do as I say. But don't make any snap decisions. Number 8, don't forget your career opportunities. This is important. In a recession, even if unemployment doubles to 7%, 93% of people are still employed. You can still get raises. You can still change jobs. You can still become valuable to the company. I would add, get close to revenue. Get close to revenue. And then finally, don't panic. I'm so glad that Bankrate included this in their analysis. Don't panic. Recessions are natural. I personally hope you live through 5 or 6 of them. It means you lived a long, full life. That would be great news. Don't be scared. Don't be fearful. Don't put your head in the sand. Control what you can control. And then I would tell you, get after it. Recessions are when you build wealth. It's when you build wealth. Go for those opportunities. Find your lane. Find your thing. Become uniquely focused on that thing, and you can change your financial future. And then lastly, shout out my boy, Lance Lambert. Folks, if you're not following News Lambert on Twitter, you are truly missing out. If you are interested in housing information, him and Logan from Housing Wire put out amazing data daily. I don't know how these guys do it, but they do it. Something that Lance put out the other day is it looks like Zillow has changed their forecast. They are now estimating out of the roughly 400 largest markets, 294 will increase, 102 will decrease, and I'm guessing that means 4 will be flat. Yeah, it has to be 4 flat because that would be 400. So again, folks, people are starting to realize, I think, that the housing market, the bear that was November, December was over. There is no new inventory. New listings are still down. It is where we are. We have that bifurcated market. So again, below the median on fire, bidding wars, offer review dates, waiving inspections. Be very, very careful. And then luxury is slow, slow, slow. Folks, have an amazing day. It is Monday, the 24th. We are getting closer and closer to 50,000. If you want to be part of the One Rental at a Time family and tell everybody you are part of the first 50,000, please subscribe today. Please ask your friends and family to subscribe. Why 50,000? Well, when we get to 50,000, I will start planning an event in Las Vegas. This is something Dion challenged me with a year and a half ago. I'm going to be spending at least 10 grand on an event to celebrate all of you. So help us get there. We're almost, I don't know, what are we, 4,410 people away. 4,410. Please subscribe us today. Help us get there. Have a wonderful day. All of you are amazing. Bye-bye.